Hello, and welcome to the first episode of the 2025 season of Livewire's Buy, Hold, Sell. I'm Huntsley, and it's great to have you with us. Now, as most of you would know, we conduct a survey every year as part of our Outlook series. We ask you a host of questions, one of which is, what is your favourite growth stock? Well, this year, nearly 5,000 of you shared your thoughts with us across the Livewire and Market Index platforms, and today we are going to run the ruler over the top 5 vote getters. Plus, we'll also ask our panellists for a stock that isn't on the list, but should be. To do that, I am very pleased to welcome Joe McCarthy from Elston and David Wilson from First Santia. We've got a lot to cover. Let's get stuck in. First up, we are discussing CSL. CSL voted number 1 by the Livewire and Market Index readers. Of course, a multinational biotech company, one of the great Australian success stories. David, to you first up, is it a buy, hold or sell?
For us, it's a hold. It's been a great success story. But the Vifor acquisition really sort of set them back. They spent basically $18 billion and have not got an adequate return. So they've still got a great blood products business, but they really need to establish that earnings momentum that's been missing in the last couple of years.
Joe, CSL down more than 7% over the past year, underperformed the ASX by almost 20% over the same period. Is it due a turnaround? Is it a buy, hold or sell?
Look, it's a buy for us, but also I understand what David's saying because the Vifor acquisition was quite disappointing and a bit of a misstep by management. But as we stand here today and we look at the valuation and the growth prospects that price is in, it's materially lower than what it was before COVID. Now, we look at the business and we're talking about the core plasma therapeutics business in Behring and also the industry. That's actually not a lot different in terms of what's there and also how the industry is performing. And, we look at this, they've had that tough period during COVID where that was disrupted, and they're now getting back to, a good operating rhythm of growth. We actually think that business is definitely going in the right direction now. And we can see that with the most recent industry data.
Okay. Next up, we're going to stay in the healthcare space and talk about Dr. Sam Huppert's company, and Anthony Hall's company for that matter, and that's Pro Medicus. Safe to say this one's reached market darling status. PME, in case you don't know, develops and supplies healthcare imaging software, radiology information system software, and services to hospitals and other institutions. Joe, is it a buy, hold, or sell for you?
Look, it's a hold for me, potentially even becoming a sell. And the reason for that is not because of the offering, because undoubtedly it's the best offering in the market, and I think they'll continue to gain market share. But where I think we're different is that the extent of the market share gains factored into the share price we think are just excessive. And the reason for that is not everyone's going to go for the highest priced offering regardless of the value behind it. So, we look at some of the other offerings that are coming to market now. They're at a lower price point. They've got similar speed but a bit less and just the same functionality. We also think that, internationally, because they do need to expand globally to justify their price, it gets even harder because the radiologists get paid less over there, so the productivity benefit is worth less to the hospital.
Okay, all right, thank you very much. David, unlike CSL, Pro Medicus has gone the other way, up 170% in the last year. Is it sustainable, though? Is it a buy, hold, or sell?
For us, it's a buy, and just like CSL, it's a great Australian success story.
Yes, it is.
We continue to think that the market underestimates the earnings and the addressable market available to the company. It continues to sort of penetrate the US market. It continues to upsell its product into the US hospital market as well. So for us, it's definitely a buy.
All right, I'm going to stay with you, David, and it wouldn't be a growth episode of buy, hold, sell if we didn't talk about the big Australian, BHP. Buy, hold, or sell for you, sir?
For us, it's a buy, but it's a buy. I think you've got quality assets. The valuation's not particularly demanding. They sit right at the low end of the iron ore and coke and coal cost curve. So great business, great cash generation. So for us, it's a buy.
Joe, BHP down around 15% over the past year. I think we all know the reasons why, mainly around that slowing Chinese economy. But what do you make of it? Is it a buy, hold, or sell?
Look, it's a hold, but probably similar to David where it's on the edge of buy or hold. But at the end of the day, it is mainly an iron ore business, and we look at the iron ore market and where that's going over the next year. You've got a large mine coming on in Guinea, Africa, which has significant Chinese backing. And in the past, when we've seen this, and we've seen this in the bauxite market, where again in Guinea, where large, high-grade resources were brought online, had Chinese backing, it led to oversupply of the market, and it did lead to a very long period of subdued prices there. We think that's going to constrain profitability and potentially their ability to invest.
All right, next up we have quite a spicy one, to say the least. It is one of Australia's best growth stories over the past decade, but it has not been without its volatility or its headlines. Joe, the company is WiseTech. Is it a buy, hold, or sell for you?
Look, it's a sell for me. And similar to Pro Medicus, look, it's a great business. You can't doubt their offering and they've done a great job. but the growth drivers of the business are changing. So historically, the business's, the primary driver of growth has been new customer acquisition, and now it's moving to expansion into new modules and increased pricing for existing customers. We think with this comes execution risk. And on top of that, the saga that has ensued over the last year would have been incredibly distracting and just not helped the execution side of things.
All right, thanks, Joe. David, despite all those headlines that I mentioned, still delivered a 65% return over the past 12 months for shareholders. Is it a buy, hold, or sell for you?
Despite all those headlines, Hans, we actually think the stock's a buy. In effect, they're the Microsoft Excel of freight forwarding. They've got 14 of the top 25 contracts in place with the freight forwarders globally. They've gained contracts with Nippon Express and Sino Express, which gives them access to the Japanese and the Chinese markets as well. So we think the growth is still very much in place. The revenues are going to grow at 25 to 30%. So for us, still a buy.
I like that. The Microsoft Excel of freight forwarding. We'll all be writing that down.
I might steal that.
Yeah. Joe's going to steal that one. Last but not least, this is an interesting one, actually. Woodside Energy, another commodity-related name, but it has struggled over the past 12 months, down around 20%. David, let's start this round with you. Is it a buy, hold, or sell?
Hans, for us, it's a sell. We thought those acquisitions, whilst they made sense that they announced back in August, we thought that they actually told you something. They told you that actually it's going to be hard for them to grow in Australia, and therefore they're going to have to accept a lower rates of return by expanding into the North American market. So for us, a sell.
Okay, Joe, you get to bring us home. Is Woodside due for a bounce, or is it more of the same? Buy, hold, or sell?
It's a buy, but it's a hard one because the stock has no mates. But you look at the business and, they've done the acquisitions which people didn't like and they're concerned about the balance sheet. We've done the modelling on the balance sheet and we actually can see that despite a sustained period of low oil prices, they will be able to fund their CapEx requirements. In addition to that, some of the assets they've actually got in Australia, you've got Browse and Sunrise, they actually are progressing. So contrary to the perceived challenges they do have, they actually are making headway to becoming viable projects.
Okay, interesting. All right, well, aside from discussing your top picks, we wanted to get David and Joe's thoughts on a top growth stock for 2025. While these could have received a nomination from you, they didn't make the top 5, so really we want to find out if these should have been higher on the list. Joe, what have you got for us?
So I've got Carsales, and what we really like about this is the recent acquisitions they've done with the businesses in the US and Brazil. They continue to increase the monetization of those businesses. And what we think the market misses is that there's just so much more to go with that. And in addition to that, you've got the core Australian business, which is a bit forgotten about. But one thing that's missed is the rate of innovation within that business has increased very significantly in the last 5 years. And they're genuinely creating a lot of value, not only for the customers, but also for the shareholders there.
Okay, Car Group for you. David, what do you say?
Well, firstly, we agree with Joe on Car Group. We think it's probably in the best 5 managed businesses in the country. The management team is first class. They've done a fantastic job and they've set the business up. So we agree with Joe on that. For us, the stock is Goodman Group. Despite sort of some of the press recently around sort of data centres, Goodman Group is going to continue to generate double-digit EPS growth. Got a great management team. They've got great properties set in stone. They continue to grow, globally as well. So they're well positioned across Australia, Europe, North America, and Asia. So a great business, great management team, great balance sheet, and high return on capital. So for us, it's Goodman Group.
Okay, thank you very much. That's all we've got time for today. My thanks to David and to Joe. We hope you enjoyed that episode of Buy, Hold, Sell. If you did, you can subscribe to the Livewire Markets website as well as our YouTube channel. And why not give this video a like as well? Till we see you next, thanks for watching.